It is Money Monday, a segment here at 4 o'clock where we talk about easy to understand ways to navigate our finances. We do it with our good friend and help from financial expert Paul Hood from Hood CPAs. Paul, how you doing, my friend?
I am outstanding, brother. How are you?
I'm well, thank you. Good to see you. We have three great questions coming in here today. First up is Joe. Joe bought a rental home in 2013, hasn't reported it on his taxes for the past 7 years. He wants to know, does he need to worry about filing an amendment for any previous years or be concerned about anything else?
Yeah, so Joe, what I would tell Joe is it depends on, is it a true rental? Does he have a family member in it? Or is it an arm's length transaction? So a couple of areas of concern. If he had a profit, then you can go to jail for not reporting your income. So you definitely want to go back and look. The challenge is there's a 3-year statute of limitations that if the IRS owes you money. The 3-year statute of limitations doesn't apply if they owe you money. So what really matters is does Joe have a loss or profit on that? And so he definitely should go back and amend. The challenge is if he creates losses in prior to 3 years, he's not going to get any of those refunds. But here's the big problem. When he goes to sell that rental property, the IRS will count against him for calculating his gain or loss on that selling that property, depreciation allowed or allowable. So just because he didn't get a tax benefit for depreciation on that on that rental house, they'll count it against him. So he really should go back and amend those returns, yes, even if he creates a carry forward to be able to use in future years.
All right, good stuff, Paul. Claire also wrote in over this past week. She says that she's starting a new LLC. She wants to know how she can transfer assets from her current company to her new company.
So an LLC is not recognized by the IRS. You have to tell the IRS how it's taxed. Is it taxed as a sole proprietorship? Is it taxed as a partnership? Is it taxed as a corporation? If it's a corporation, is the C or an S? And we can get real detailed in that, but the bottom line is as long as her LLC that she's transferring to is a flow-through entity like a partnership or an S corp or a sole proprietorship, and the entity she's transferring assets from is also a flow-through, and she has the same ownership, she owns one and the other, it's no big deal. Where you have trouble though, Brian, is if one of them is a C corporation, is taxed as a C corporation, then that entity pays its own taxes, and there's a potential tax ramifications for transferring assets from one to the other. So as long as they're both flow-through, there is no issue, you just do it.
Last question goes to Amy. Amy would like to have an investment property solely for the purpose of Airbnb. She wants to know, is that taxed the same way as a regular rental property?
Absolutely, it would be. It'd be printed and taxed as a rental property. Rental property is considered a passive activity, so you have loss limitations depending on what your other income, and you could still make it a full business if you qualified as a real estate professional. So depends on if it's just going to be a standard rental property and only one or two, then yeah, it's taxed just the same.
All right. If you're watching right now, you have a financial question you'd like for me and Paul to chat about next Monday, you can send in your question right now. You can send it into moneymonday@griffin.news.